So guys, first and foremost, I'm going to welcome you to the video. This is officially the first episode of the weekly trading breakdown and analysis I plan to be doing as I described in my last video, right? So if I'm supposed to again break it down in just a brief context, is that I'm going to be every end of the week, I'm going to be documenting my trades for the week, right? How the week actually went, how the trades went, the trades that I took for the week, and I show you towards the end of the week, was I actually profitable or I lost the week, right? So this is what we're going to be doing in this upcoming series and in this video as well. This is officially the first episode, like I said, the first episode of the following trading series or upcoming trading series based on weekly trading analysis and breakdown of the trades that I took, right? So this is the first episode. Let's try to see how this week went. Could be a winning week or losing one. We shall see, we shall find out. So guys, let's break it down. Let's get to the first day. Okay, first of all, let me give you an overview of my strategy, right? What I do trade. What do I look for before I can take my trades, right? So what I normally look for is very simple. During New York session, I look for liquidity sweep. Then I can look for my trades, right? So how do those liquidity sweeps happen during New York session, right? This is what I'm going to show you right now in a nutshell, right? So here, if I'm looking for buys, okay, let's imagine this was a buy setup and I was looking for a buy setup. What I would like to see is that, as you can see here, the part that I marked as New York session is what I normally focus on, right? This is New York session. This is the part that I normally focus on during what? During trading market, right? So as you can see here, the market comes down, right? The market keeps making lower lows and lower highs. Then it enters New York session. Now, what do I want to see in New York session? I want to see liquidity sweep occurring from the previous session, right? In other words, New York session takes liquidity from the previous session. As you can see here, the market pulls down. The market enters New York session somewhere here, pulls down, takes out the London lows before it gives me something like a market structure shift. Then I enter for buys immediately after the market structure shift. Then I what? Then I wait for the trade to hit my TP, right? So this is the first scenario of what I would be looking for if I was buying. Then there's another scenario, right? That is also valid according to my strategy, is that the liquidity sweep can also happen within New York session, right? Here, in a way that the market can keep dropping, making lower lows and lower highs. Then as it enters New York session and we don't see liquidity being swept from the previous session, which is the London session, we also wait for liquidity sweep to be what to occur within New York session, within the marked or shaded part, which I refer to as New York session, right? So let's say the market enters New York session here. We don't see liquidity sweep from the previous session, right? So here, the market takes out this liquidity. And as you can see, this liquidity is an internal liquidity that is within New York session, right? So it is swept. And if it is swept, the market maybe gets some form of order block here, gives us a market structure shift somewhere there, and I enter for buys just there and then, right? So this is how I look forward for buy setups. So the same thing could be applied for sales, right? Here, I'm not going to take so much time on this. Let's say you're looking for sales, right? So you just look for the buy side liquidity from the previous session over here, right? As it enters New York session, you look for buy side liquidity to be swept from the previous session, which is the London session, right? Or if you haven't got the liquidity sweep from the previous session, you also look for liquidity sweep within New York session, which could be something like this, right? The market enters New York session, forms some internal highs, then those highs should be swept before you can look for a market structure shift, before you can look for a sell entry, right? So that's how it would be if you were looking for sales, right? So let's get right into the charts and we see how the week went, right? So the first trade I took was on Monday, right? And it was actually a sell. And why was I looking for sales, right? As you can see here, on Friday, the market gave us a market structure shift to the downside, right? It left behind a what? A 2-hour bearish order block, right? So I was expecting the market to retrace back into the order block, give us some form of liquidity sweep, internal liquidity sweep during New York session before I could look for sales, right? So when we head down to a 15 minutes time frame during New York session, and by the way, the part I marked as pink is what I refer to as New York session, right? It begins at 7 a.m. New York time and ends at 5 a.m. New York time, right? So here in the 15 minutes time frame, I was waiting for the market to take out liquidity from the opposite direction, which was buy side liquidity, and it happened as I was expecting. I took out liquidity somewhere there, not by much, but it just wicked out liquidity over here, but it is still valid, right? So this was the liquidity sweep that I was waiting for. It happened shortly after New York session opened, right? So after that, I only wait for the market structure shift, right? And the market structure shift happened just shortly after that, which was somewhere here, right? And the market structure shift happened, and I was only waiting for the market. And after the market structure shift, the market did leave behind an inefficiency over here, inefficiency or imbalance, right? So I was waiting for the market to go back into the inefficiency, feel the inefficiency, the imbalance, before I could now enter for my trade, which I normally do in the 5 minutes time frame. I enter my trade from the 5 minutes time frame, right? Now in the 5 minutes time frame, what did happen is that the market indeed went back and filled the inefficiency somewhere right here, and gave us a second market structure shift, which was somewhere right here, or we could normally call it a break of structure to the downside, right? Let me just call it a market structure shift, right? So I entered immediately after the market structure shift here in the 5 minutes. My stops were just somewhere here, and my TP was at a risk to reward ratio of 1 to 4, right? I was targeting 1 to 4 risk to reward ratio, but after the market gave me a 1 to 2, I took 50% of the position and I waited for the rest to run up to full TP, right? And eventually the market did hit the full TP. So guys, this was what happened on Monday. See you on Tuesday. So when we head to Tuesday, right, I took a trade on Tuesday and it was as well a sell, and the reason behind the sell was pretty much the same reason I took the sell on Monday, right? So as you can see here, the market on Monday had a break of structure to the downside, right? And as it broke structure to the downside, it left behind a bunch of inefficiencies over here. These were a bunch of inefficiencies that were left behind, and on Tuesday I was expecting the market to fill the inefficiencies, right? So, and by the way, the inefficiencies were also at the OTE level, right? This part, the part of the FIP, is what we refer to as OTE, optimal trade entry levels, according to ICT, right? So this was also what I was expecting the market to get to that zone before I could look for sell entries. So when we head down to the 15 minutes time frame, so on the 15 minutes time frame, when we remove the FIP, on the 15 minutes time frame, as New York session opened, what did the market do? Right? The market headed up. As it was heading up, it took a bunch of liquidities that were lying below the OTE level, right? This was all liquidity. This was all liquidity, and the liquidity was a bunch of equal highs that was supposed to be taken before the market gives us a sell entry. So all this liquidity being swept act as a fuel for the market to dump down when it is now willing to sell, right? So this was the confluences. These were the confluences I was looking for before I could look for my sell entry. So since the market has taken enough liquidity, bunch of equal highs, and also entering into an optimal trade entry zone, right? So I was now confident enough to now look for a market structure shift so that I could sell my trades, right? So if I head down to the 5 minutes time frame, now from the 5 minutes time frame, the market was consolidating, right? It was not giving me a proper market structure. So I refrained from the market a bit to wait for the market to be clean so that I could take my trade side. So I never took my trades from that confused area of the market, right? So after some time, the market dipped down, gave us a very clean market structure shift over here, right? A very clean market structure shift, but I still never took the trade. I was a bit late. Some things delayed me, right? So I was a bit late. So what did happen here? I entered the trade late somewhere here. The market went up to that order block, started dumping. Then I had to enter for a trade late somewhere right here, and my stops, I just put them up here, right? Then I just, like I normally do, is that I hate for 1 to 4, right? But after I 1 to 2, I take 50% of my position, and the market indeed gave me a 1 to 2 here. I took 50% of my position. Then unfortunately the market reversed and took us off at break even, right? And I only risked 0.5% on this trade, and that is not normally my risk, but I had to risk 0.5% because I entered late. I never knew what was going to happen, right? But I normally risk 1% per trade. So this was the trade I took on Tuesday, guys. Let's see what we have on Wednesday. So when we head to Wednesday, on Wednesday I had a very clean buy setup, right, which I'm gonna break down right now in a way that you all understand, right? So on Wednesday, what was I looking for? I was looking for buys. And why was I looking for buys? As you can see here, the market was what? The market was bouncing off bullish order blocks from over here, right? The market went up, retraced, bounced off this bullish order block, headed up, broke structure to the upside, right? Again, it came down. It was now showing me signs of it bouncing off of this order block, right? So I wanted to align myself with the trade so that you could also what? Sweep off these highs of the market, right? So this was why I was looking for buys on Wednesday. So let's head down to a 15 minutes time frame and we see what happened during New York session. If at all, the things that I normally look for happened during New York session. So on the 15 minutes time frame, as you can see, this marked part is the order block, the 4-hour order block that we looked at earlier, right? Where the market bounced off or wicked out from, right? So as you can see, even from the 15 minutes time frame, the 4 hours order block, the 4 hours bullish order block did not hold, right? The market was bouncing off that order block, so it was showing us signs of reversal. So this was still the London session. I was waiting for New York session to look for a liquidity sweep, a sell side liquidity sweep, so that I could look for a market structure shift, so that I could look for what? For buy entries, right? So this was what I was waiting for. And as you can see here, if I'm to zoom in a little bit, New York session clicked in, and what did happen here? If you can observe very, very closely, the market took out this liquidity. It was a sell side liquidity that was taken. Right now, from the 15 minutes time frame, it may not be that visible, but when we head down to the 5 minutes time frame, where it is very visible and where I will take my trade, as you can see here, from the 5 minutes time frame, it is now very visible. The market opened, the New York session opened, headed down, taking this liquidity, giving us a very clean market structure shift over here, right? That was a very clean market structure shift somewhere there, and I entered for my trades immediately after the market structure shift. My stops were below these lows, and I was targeting a risk to reward ratio of 1 to 4, right? So this was what happened on Wednesday, and it satisfied everything I discussed from my strategy in the beginning of the video, that if I'm looking for buys, I should see the market during New York session, sweep liquidities, sell side liquidities, before I could look for a market structure shift, before I could look for what? For buy entries. This is what happened, right? But here, when it gave me a 1 to 2 risk to reward ratio, I took 50% off, and I let the rest run up to full TP, right? So guys, this is what happened on Wednesday. Let's see what happened on Thursday. So when we head for Thursday, on Thursday I took a trade and it was a buy, but I lost it, right? So why was I looking for buys in the first place? As you can see over here, the market on Wednesday broke structure to the upside, right? And I was looking at this 4-hour order block, right? I was looking for the market to retrace back into that order block, and during New York session I look for some form of liquidity sweep, then I enter for my buy entries, right? That's what I was looking for on Thursday. Now when you head down to a 15 minutes time frame, on the 15 minutes time frame, as you can see, and by the way, the marked part is the 4-hour order block I marked earlier, right? So on Thursday, New York session, as you can see, the market took out this liquidity, sell side liquidity from the previous session, right, which is the London session. And by the way, on Thursday there was CPI, and I do not trade CPI, nor do I even trade NFP, right? I do trade after those major news events happen, right? So after the market took liquidity, CPI happened at 8:30. I skipped that part, right? After CPI ended with this one big candlestick, I waited for the market to retrace back into this 15 minutes order block, and I put my stops just at the order block, and I put my limits just at the order block, and my stops were just below these lows there, right? And I was aiming for 1 to 4 as always. And now what did happen here is very simple. The market retraced back, triggered my buy limits, took me out rapidly without wasting much time, and I lost the trade. Guys, that's how I lost the trade on Thursday. Let's see what happened on Friday. So guys, when we now look at Friday, I took a trade as well on Friday, and it was a sell. So why was I looking for sells, right? As you can see over here, there was a break of structure to the downside, right? A break of structure to the downside, and it left an hourly order block behind, right? This was an hourly order block. I was expecting to see the market retrace into that order block, give us some form of market structure shift after taking some liquidity. Then I would look for my sell entries, right? So let's head down to a 15 minutes time frame to see what happened during New York session. As you can see here, during New York session, the market took out this liquidity from the previous session, which is the London session, right? It was the buy side liquidity. So around this area, I was looking for the market to give me some form of market structure shift before I could enter for the trade, right? As you can see, the market structure shift happened somewhere right here, and I entered for the sells just below the market structure shift. My stops were above these highs, and my TP was just below there. But as you can see, the market took me out as soon as I entered the trade, right? So that's how I lost the trade on Friday. So guys, this is our overall weekly result, right? Let's break it down. On Monday, we took our first trade and it was a win. We made 3% of our 5,000 USD account. On Tuesday, we traded and we risked 0.5% of the trade. We only made 0.5% of the trade because at 2R, I took 50% off, and immediately the market reversed and took us off at break even, right? I risked only 0.5% of the trade, though I normally risk 1%, right? On Wednesday, we had a trade as well, and it was a very clean win. We made also 3% of our accounts, putting our account up to 6.5%, right? On Thursday, we had a loss of 1%, right? We risked 1% and we lost it. On Friday, we also took a trade which we lost, and we lost 1% of our account also in that trade, right? So when we sum it up together, at the end of the week, we saw that we made a profit of 4.5% over the week, right? So guys, this is our weekly result. Our weekly result is 4.5% of our 5,000 PropFarm account, right? So guys, I can say this was actually a very good week, and I hope we also win the next week like that. So guys, so I hope I see you in the next episode of this video. And if you found this video insightful and helpful to you, make sure you subscribe so that you don't miss any of our next episodes that are going to be on the way coming, right? Make sure you also turn on the notification bells so that you don't miss any of our next episodes. So guys, see you in the next video, and thank you for watching.